Hello guys, welcome back to another Linktree video. In this one we're going to be doing some in-depth stock analysis on Goldman Sachs, ticker GS. Reason for this is we are seeing a lot of the banking stocks pulling back. Most of them are down at their first deviation, apart for Citibank, and that's why we did an analysis video on it about a week ago, because that's coming down to the second deviations. Apart from that, the majority of all banking stocks are kind of at low risk long areas in this kind of first deviation area. But Goldman Sachs, apart from Wells Fargo, was one of the leading ones down on Friday. So it just kind of made sense to do some analysis on this. Reason as well the pullback could have been a bit stronger today was on announcements of JP Morgan having to do a $200 million settlement for a compliance investigation. But apart from that, there's not really too much news surrounding it. As we see interest rates rise, that's probably when we'll see the banking sector do stronger. Obviously because their revenues will increase off that. To start off, we always start off on a clean daily chart so we can see is there any gaps that need to be filled. And looking straight or very quickly at it, it's hard to see any real gaps that need to be filled. I mean, we obviously have one kind of down here, but it's just so far away, we're not even really going to be able to use it as a price target. So really, we're not looking at any kind of gap fills on Goldman Sachs. It doesn't seem to be any obvious ones, and we only like the obvious ones because they're the ones that have the reactions. And as we only use them to lock in profits, unless it's an obvious one, you don't tend to get the biggest reaction coming into those levels. So it doesn't make sense really to be locking in profits if it's not very obvious. Now, to get onto the standard deviations, we can see Goldman Sachs already at its kind of first deviation on the 4 hour, which is around $389, and it's kind of bouncing around that with the 383, which is the first deviation on the daily, and that's why we're kind of just seeing it consolidate on this area, because with with all large cap stocks, they don't tend to like to break below the first deviation. So unless there's usually some news to kind of push it down further, a lot of the time they won't actually break down that far. And especially on solid stocks like Goldman, JPM, kind of all these strong banking names, they don't really want to be dropping down unless there's any news. And that's why we're kind of seeing it consolidate on this level. But what you will see is we've already had the initial bounce, as you'll be able to see on the 4 hour. Came into that first deviation, it's got its bounce to statistical mean, so now we're kind of waiting for it to kind of push either way. And by that I mean, if we're looking to get long on Goldman, yes, you are considered a low risk long now, so you could, but as it's consolidating on this kind of between the first deviations, it's telling us that it kind of does want to break down. It's just going to require some sort of catalyst to do that. So when I see that, more likely my target to buy is going to be $366 because that's the closest deviation to the downside. So yes, right now we are in a low risk long, so if you're investing, probably not day trading, and if you're doing a longer term swings, then I guess it's an alright level to be buying on. Otherwise we would probably be waiting for it to break down that bit lower to 366. And then obviously if it continues down, then we have the next targets. If it does come down to 340, this will be a key buying area because it's the second deviation on the daily, third deviation on the 4 hour, and both deviations are facing upwards, showing that we're in a strong uptrend for the year and the past 180 days. So that would be a very low risk long, and one we would look to take with relatively big size. And then if it does for some reason fall down even further, which would be quite unlikely, that $300 level will kind of be that next one because it's a third deviation on the daily, and also the psychological $300 level. We would expect a relatively large bounce, or we would expect that if it hasn't reversed before then, that would be a kind of our key reversal level. We would expect it to reverse at 366. If it doesn't, don't really see it breaking past 340, and that's just because you've got the two deviations next to each other. And it would also mean it goes past the third deviation on the 4 hour, which you hardly ever see. I don't even think in the original COVID crash, I don't even think any of the key banking stocks actually broke below the third deviation. Now, where would we be looking to lock in profits? Now, kind of wherever you get in, our final target, if you're looking for either day trading or swing trading, will be this 413, but we'll say 410 to be safe. The reason this is our kind of final target is because it's statistical mean. When stocks come into statistical means, we then have no idea where stocks are going to go from there. I mean, even now, I guess we don't really have an idea of where we're going to go, but more likely than not, the stock's going to try and reverse to that statistical mean, as that's what all stocks try to do. They always try to go back to that statistical mean. So if we're buying a stock at the first, second, third deviation, we know it's going to try and push up to that to that statistical mean. However, if we're holding the stock long, for example, we come into statistical mean at 410. From there, we really have no idea where this stock's going to go. And usually then it's more down to a news catalyst. So you're more gambling on whether a good news or bad news catalyst will come out. And that's why that we always use that as our final stop if you're looking for day or swing trades, because you don't want to be in the trade for a long amount of time if you don't need to be. That's kind of usually that statistical mean is usually the optimal time to be in the trade to maximize returns in that kind of period of time, and then you can usually find a better investment elsewhere. Now, if you are looking for investing, you're probably going to be looking up for higher targets, or if you're looking for very long-term swings, then we would start going to kind of, I guess, the statistical mean on the daily, which would be 325. Then you got the first deviation on the 4 hour at 335, and then you got the first deviation on the daily at 470. Again, second deviation at 460. Kind of any of these levels, whether you're looking for very long-term swings or investments, these are areas where we would consider locking in profits, because from here, these are areas you expect either large pullbacks or reversal. So obviously if you're in it long, even if you're looking for kind of short-term investments or long-term swings, it makes sense to be getting out at these levels, even if you want to trade it higher, because you can get out at these kind of pullback zones and just get in when it becomes a bit lower. Now, so as we did say, we'll kind of delete these all quickly just to clean up the chart a bit. As we did say, our final target on these day trades and short-term swings will be around 410. We will always also use the first deviations as areas to either move our stops or lock in profits if we are able to buy in lower. By that I mean if we're able to buy the 366 deviation or below, then we will probably use that first deviation as an area to at least move our stop, and if not, lock in some profits as well. So I hope that's a good breakdown for you on Goldman Sachs. I hope that gives you some insight into the stock and where we should be seeing it going. If you did enjoy, don't forget to drop a like, and hope to see you in the next one. That's it. Peace.